Hi and welcome to Penser Bank and our Analyst presentation of Fingerprint Cards. My name is Markus Almerud and I'm an analyst here at the bank. So Fingerprint Cards is the leading producer of capacitive fingerprint sensors to mobile phones, PCs, smart locks and debit and credit cards. The investment case in short is that we believe in sharp growth ahead, particularly driven by PC and access cards, and we don't think the market gives it credit for this. On top, you have the optionality from payment cards, which we think will be the next mass market for fingerprint sensors. We have adjusted our fair value range for the rights issue and are now at 15 to 17 krona compared to the current share price of around 5. So the reason for talking today is to discuss the capital increase and where to go from here. Starting with the background. So mobile phone sales in China basically collapsed as the country closed down during the second quarter. Meanwhile, the supply chain had prepared for an upturn in the second half of this year, and as it became clear that this was not happening, the whole value chain started to empty their inventories, starting with the OEMs. This means that they did not order anything from their sub-suppliers, who did not order anything from their suppliers, which is Fingerprint. So meanwhile, from the other end, Fingerprint had ordered wafers for production 6 months ahead. The impact was that on the one hand, Fingerprint kept getting inventory in, but very few finished products were shipped on. So the inventory built that resulted was massive. During Q2 and Q3, they doubled their inventories from 200 million krona to 400 million krona. And this can be compared with our full year revenue estimates for 2022 of 800 million krona. So in other words, this massive capital build needed to be financed, and hence the capital injection. So where are we now? Well, the OEMs are done. The module houses and distributors, which are in between the OEMs and Fingerprint, have destocked for a quarter, and Fingerprints have started to empty their inventories now in the fourth quarter. We believe that this means that sales will be up sequentially in the fourth quarter. We should expect another couple of difficult quarters, but it's not going to get worse than now. And I think this is important. So let's look forward. What does the future hold? Well, firstly, we think that all product segments are growth segments as we exit the COVID-induced crisis. Penetration rates for biometric authentication in PC continue to grow, and Fingerprints is gaining market shares. Mobile will grow because of the introduction of optical sensors, which is half of the mobile market. Access is growing in a number of product segments, and payment cards are accelerating, but from low levels. So in summary, we expect the Chinese mobile phone market to normalize over the next couple of years, and meanwhile all other segments, which have higher margins by the way, are growing. Other segments go from 10% of sales last year to 30% this year and 45% in 2023. So this is a company and a stock that will exit a perfect storm in a couple of quarters, where the terms of the ongoing rights issue are out and where the full issue is guaranteed. It's been messy, the mess is not over yet, but we're almost there, and the future is incredibly bright.